In the last episode, I introduced the Chikou Span component of the Ichimoku indicator. This time, I build on that and start to investigate the rules that might be used to incorporate Chikou Span into a wider Ichimoku trading strategy. Stay tuned. Darwinex is a UK FCA-regulated broker and asset manager on a mission to disrupt the financial trading, investing and asset management industries. As a trader, you'll benefit from cost-effective market access via multiple trading platforms and APIs. These enable trading and investing in any US stock, over 60 of the most liquid futures contracts, FX and CFDs. You can even diversify your portfolio by buying and selling other traders' strategies as investable assets themselves. So, if all of that sounds interesting, learn more by clicking on the link top right now, or find further links in the description right below. Now back to today's tutorial. Today I'll be looking at how the Chikou Span line might be used as part of a trading strategy and considering some of the characteristics that can be used to inform trading rules. This is all part of the Spotlight on Indicators series, and specifically last time I covered how the Chikou Span is constructed and also some guidance around how it needs to be interpreted given the fact that it's plotted 26 bars in the past. And the fact that it's plotted in the past is one of the reasons why it's often called the lagging span. Now today I'll start to look at the rationale behind this and also consider how we can build some rules and principles around the interpretation of this lagging span in order to form part of a full trading strategy. So as a very brief reminder, last time I talked about how trading decisions obviously need to be taken at the right hand side of a chart where the price action is currently trading. But because the Chikou Span is plotted 26 bars in the past, the interpretation of that needs to happen along this vertical line that you see here. Now, typically, the Chikou Span is interpreted by seeing where it is in relation to other elements of the Ichimoku indicator, or indeed where it is in relation to price at this time 26 bars ago. So let's look at that price example initially. The current value of the Chikou Span is here. The price at this time was here, and so clearly the Chikou Span is below the price action. But what does that tell us? Well, because of this lag from current price action back 26 bars, it means that sellers have been dominating recent price action. And since this time, price has indeed gone down, and it's been driven down by that excess of selling activity over buying activity. And so this tells us that the sentiment of this asset currently is bearish. Let's choose another place on this chart. So let's go back to this point here. And this is the opposite situation, where the Chikou Span was above the price action at this point. Now, when looking back at charts like this, we have to remember that the Chikou Span here was 26 bars behind the current price. And so this is the point here that would have been the current bar at this time. And because of the fact that the Chikou Span is above the price, this tells us there's been a dominance of buyers during recent price action, and therefore in terms of the sentiment, it's bullish. Now some strategies don't use the price but instead might use the Ichimoku cloud in order to form this comparison with the Chikou Span. And these are all different rules that I'll be testing out in the future to see which work best and which help to achieve the biggest edge. But there is one more that I want to cover, and that is a Chikou Span crossover. So again, I'm going to use this in relation to price action at the moment, but equally, some traders look for crosses of the Chikou Span across the cloud. And what is it that this kind of crossover tells us? Well, rather than just simply telling us whether sentiment is bullish or bearish, this of course indicates a potential change in direction of that trend or a change in the sentiment. So going from bullish to bearish, or if the crossover is in the opposite direction, bearish to bullish. But once again, remember that a crossover that occurs at this point isn't relevant at this point, it's actually relevant to this point here, 26 bars ahead. And when this crossover occurred here, helping to inform that we were moving from a bullish to a bearish phase, the price action from that point did indeed begin to fall. So there's two very simple examples of how we can use the Chikou Span to incorporate it into our trading strategies rules. But there is a warning here. You should never use the Chikou Span in isolation. It will never produce a profitable strategy in its own right. And the intelligence that it provides should always be used in conjunction with other components of the Ichimoku indicator. And of course, I issued a similar warning when we looked at Tenkan-sen and Kijun-sen. Equally, they can't be used on their own. But this series will start to get really interesting when I start to construct full strategies that use a combination of the components within Ichimoku and test those out. But of course, we need to walk before we can run, and so right now we need to stick to the individual components so that we understand them more in order to then combine them at a later stage. And with that in mind, I'm going to move on to the final component of Ichimoku, which is called the Ichimoku Cloud, or to give it its proper name, the Kumo. And the Kumo itself is built up of two individual lines called the Chikou Span A and the Chikou Span B. And arguably the Ichimoku Cloud is the most discussed component of the Ichimoku indicator. Now remember, you can access all episodes from this video series by following the playlist link in the video description. But now, until next time, trade safe.